and it still powers ahead. So the further out the risk curve, the larger the corrections, and the larger the comeback is when it comes back. So big picture, zoom out. This is total market cap of crypto minus Bitcoin. Looks all right to me. Total market crypto minus Bitcoin and ETH. Looks all right to me. Total market cap of crypto minus the top 10 tokens. This is the others. Looks fine to me. What evidence do you have that it's all over? That the 4-year cycle is Satoshi's gift to the world, so any dribbling moron can follow the cycle. It just doesn't work that way.
Hey guys, welcome to Everyday Finance. As anxiety dominates timelines and sentiment falls, Raoul Pal provides an analysis of the panic that is sweeping across the cryptocurrency industry. The announcement that MSCI intends to remove crypto treasury companies from its indexes beginning in January 2026 has caused the community to be on edge. This decision was initially communicated through a research paper published by JP Morgan to the public. The response was really explosive. In a show of defiance, Grant Cardone withdrew $20 million from Chase, while Max Kaiser advised individuals to crash JP Morgan and increase their investment in Bitcoin-backed assets, which amplified the indignation that was taking place online. Many people are concerned that index exclusion could result in forced sell-offs, taking place from funds that are only permitted to hold qualifying assets. This would add significant downward pressure on Bitcoin as well as the market as a whole. A forceful response was provided by Michael Saylor, who clarified that strategy is not a passive trust, but rather an active Bitcoin-backed finance company. He also issued a warning that the new laws might potentially distort markets by penalizing any company that has more than 50% of its assets in cryptocurrency.
Bitcoin is, and crypto is, a macro asset class. That's the important thing to understand. What it means by macro, it's driven by macroeconomics. And macroeconomics, for me, is the business cycle. And here is the business cycle, up and down. We talked about that before. And lo and behold, remember that, the 4-year cycle? Well, that was the crypto cycle. No shit, Sherlock, because it was the debt refinancing cycle. And right now, the ISM is kind of in that middle year where it's not hooked up, not grown. Bitcoin's slope has been frustrating for people. I want this bit. Well, it's going to come in the next 12 months, and everyone's going to go, he said that last year. He's a moron. He's just a snake oil salesman. Look, market analysis is not some sort of crystal ball where you see the absolute truth in everything. The everything code is the truth. How it plays out is still something we need to learn. And we need to understand the nuances. When the world gives you lemons like a government shutdown, you need to deal with it. You bought the ticket, you take the ride. And you just kind of grow up and deal with changing probabilities, because that's how the world works. When we look at financial conditions, this is our financial conditions index, which is correlated to gold, as I said, even though it's not, gold's not in the index. Total liquidity lags it. So by 3 months. So it's suggesting that liquidity should start rising, which makes sense because we know what we've got to do. We've got to pay the debt, and we know that the TGA is going to be drained, and the QT is going to finish, and the Chinese are increasing their balance sheet, and we got regulatory changes coming, and we got rate cuts coming, blah, 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 blah. And the ISM, the business cycle, follows that. So the next thing for the business cycle is to go higher. Business cycle going higher means we'll have money in our pockets. It goes into risk assets, and that increases the price of crypto. It's not that complicated, but nobody wants to believe it because you're looking at 5-minute charts and scratching your nuts, wondering what's going on. You can't do stuff like that. It doesn't work. And demanding that you get paid. You can make all the demands you want. The market doesn't give a shit. And once you learn that, it's much easier to deal with. So at the ISM, we're seeing that it's some of the surveys are starting to increase sharply as the tariff stuff happens and people start getting more comfortable. What we've seen is like Empire Survey started going up. It can diverge, obviously, but I think we will see the ISM starting to come up. Bitcoin is already priced in the ISM really quite low at about 47. So Bitcoin's diverging from these surveys as well right now, because I think there's a liquidation going on in Bitcoin, because liquidity is starting to come back in. Crypto's trading like shit, like somebody got hosed in October the 10th and is unwinding something. That's what it feels like to me. And, it feels like, and we'll come on to sentiment in a sec, panic lows. Okay, the dollar, big component of all of this. The dollar is what is the main part of financial conditions, which leads. The dollar is following the last Trump cycle almost perfectly. Now, will the dollar's still going higher, I think, in the short term, but it should roll over and have another leg lower. Doesn't change the world if it doesn't. It just means that we have a pretty good read on when the end of the cycle is, because this leads by like 9 months. So as part of our financial conditions index, but our general thesis is liquidity comes back. They start changing a few things with like SLR, stuff like that. And again, those of you on Real Vision, I can answer all the questions about this stuff tomorrow on the AMA. But generally speaking, as the liquidity comes back in, we should see the dollar have its final leg lower. There's a few parallels. Again, remember, they're not going to be perfect. Don't expect to pay out perfectly. Think of it as contextualization and understanding, where you put it against 20 other things to try and ascertain what you think is going to happen. So Bitcoin in 2024, basically repeating. 25, repeating. Same correction. And you guys were losing your fucking shit back then as well. And guess what? It V-shaped out of it. But you don't remember that, do you? Because that would be too easy. Or whenever this correction was, July 24 to 25, same thing. Corrections are very similar. And we've got many of these charts of sort of similar style corrections. So I think we should continue that way. Bitcoin 14-day RSI, as oversold as it's ever been. And basically, after this, it can fuck around a bit and then slingshots out. So expect, you can't digest a move like this instantly, but we're talking, days, a week, 2 weeks maybe, before then the market takes off. It could also just come straight out of it like it did then. We have to wait and see. Weekly Bollinger Bands, that's the contraction in volatility. We got to these super low levels. Every time we got to these levels, we've shot out of the gate. 189%, 125, 107%. It works really well.
Treasury businesses that have considerable exposure to cryptocurrencies could lose their eligibility for indexes if the restrictions recommended by MSCI are implemented. This would force these organizations to either reduce the amount of cryptocurrency they own or face being shut off from passive capital flows. Many analysts are warning that if businesses start selling off assets in order to comply with regulations, the accompanying sell pressure might make the volatility of digital assets even more severe. In light of the fact that the cryptocurrency market is already unstable, there is a rising concern that the removal of key Bitcoin-heavy companies from indexes, such as the Nasdaq 100, could result in a chain reaction of significant price drops. It is feared that this structural shift could make the current slump even more severe, thereby increasing the level of uncertainty that Raoul Pal refers to as noise, drowning out the signal at a time when the market is already particularly sensitive.
And you've all forgotten that you were feeling the same in April last year. And I was pointing this exact thing out to you. Oh, we've already just had one of these. And that was the one the prior year that finished in September, where you were losing your minds. And you were losing your mind saying, why is it not working? Everything's broken. Nothing happened. Boom. The market shot up. I mean, it went from September at wherever it was, 50,000 to over 100,000. That's Bitcoin. And then it went from 75,000 to like 120,000 after the last one. So where are we now? 28% correction. Oh, guess what? They were both 28% corrections. Will it be exactly 28%? Will it be 30%, 32%? I don't know and I don't care. Unless you think the cycle is over, in which you have to show me other data than, well, they told me the cycle finishes after 4 years, so it's over. That's not an argument. The other thing is, because you've all lost your shit, you're throwing poo at each other, the fear and greed index is absolutely shockingly low. We've had a whole series like 5 days or 4 days where it's been below 20, which is almost unheard of. It's like 2022 levels. So everybody is in extreme fear. You think the cycle's over, and all it's been doing is doing the same old shit. And it always does this. So these are all the corrections we've had since the start. We're at a 20%, a 20%, a 20%, a 21%, a 33%, 31%, a 28%. And then we look at it back in the previous cycle, 31%, 9%, 21%, 14%. And the previous one to that was all 35, 40%. Then 50%. And it's like, guys, this is what you pay in volatility for the returns that you get. Look at the returns. 2,000%, 476%, 11,000%, 55,000. I know they're diminishing over time, but when you look at things like others, which is the more speculative end of the crypto market, i.e. everything below top 10, the corrections are 60%. And it still powers ahead. So the further out the risk curve, the larger the corrections, and the larger the comeback is when it comes back. So big picture, zoom out. This is total market cap of crypto minus Bitcoin. Looks all right to me. Total market crypto minus Bitcoin and ETH. Looks all right to me. Total market cap of crypto minus the top 10 tokens. This is the others. Looks fine to me. What evidence do you have that it's all over? That the 4-year cycle is Satoshi's gift to the world, so any dribbling moron can follow the cycle? It just doesn't work that way. Okay, let's look at some technicals. I use Demark indicators. We'll do something with Demark. They've now got them on TradingView. It's a paid service, but nothing like how expensive it cost me on Bloomberg, because it's a cut down version. Demark is the technical system that Tom Demark built. There's a whole course on Real Vision on Demark by Tom Demark. We're the only people in the world to have that. It was a system I learned back in 2000, 1999. It is what Stevie Cohen, one of the world's greatest traders of all time, uses. John Burbank, Stan Druckenmiller, I mean, you name it. Lee Cooperman. A lot of people use Demark. And so Demark indicators, you're looking for these 9s and 13s. I'm not going to explain it all to you. You can just take a snapshot, stick it into ChatGPT, it'll tell you. But anyway, daily 9 today. It's possible that we base today. I don't know. I haven't seen the NVIDIA results. I don't know anything. It's possible. Or we count down to another daily 13, which is now 7 days away. But either way, it's getting pretty low, considering how washed out sentiments was and all the other things I showed you. Here's Ethereum. We put another 13. 13s are really powerful signals, often signal the end of a trend. We've had 2 13s in a row. We're down on the trend line, which is kind of down all of this area here. Feels like it's pretty decent level. Here's Sui. Sui's back at this level here. We're at congestion before. It's counted down to the 9. We're at 9 out of 13, so another 4 days it would have that as well. A 9 and a 13 tend to be killer signals, but the 9s have worked perfectly every time. 9, 9, 9, 9. They work really well. That one didn't work. It had a counter trend move and then counted down to the 9s and 13s. Anyway, speaking, it's all probabilities, no certainties. There's no magic thing that's going to get you right 100% of the time. What you're trying to be is more right over time. The weekly Sui chart, really nice pattern again. We've got the 13 and we're in week 7. So could we count and get another couple of weeks here? Possible. I mean, that would be just icing on the cake. Icing on the cake with cherry on top, if we were to get there. Are we going to get that? No, because we never get nice things, right? But the market wants to make it hard for us. It will make it hard for us. Bitcoin corrected 32%, 32%. Why there were 28? Oh, Julian was using closing prices and I used open high lows. Right now it's about 28%. This is normal. You have lived it before. So it's like going, oh my God, I've woken up and the sun's up. Oh my God, the world's going to end. What's that ball in the sky? Well, it happens every morning. Well, yesterday was cloudy. I know, but the sun is still there. So you've lived this before. You understand the volatility. Oh my God, it's so hot. Yeah, because the sun's come up. Solana corrected. This is now the risk curve that I talk about. 47%, 67%, currently 48%. Oh, you see the stair step? SUI, newer token, lower free float. SUI corrected 69%, then went up 150% in a month to new highs. 79% in 2024. I don't know if any of you even remember the 79%. Then it rallied 412% in 2 months. 412%. Then it fell 68% in 2025 and rallied 157% in 2 months. And right now, we're down 65%. It's normal. That's what it should be for this maturity of asset and where it fits in the risk curve. This is all kind of normal.
Robert Kiyosaki has increased the severity of his warnings, asserting that the most significant market meltdown in history is already taking place across the United States of America, Europe, and Asia. It is his contention that the downturn is escalating not only as a result of economic instability, but also as a result of the rapid emergence of artificial intelligence. He is of the opinion that this will result in the loss of millions of jobs and set off a chain reaction that will affect commercial buildings, real estate, and entire sectors. In spite of his pessimistic view, he maintains that investors who take prompt action can still safeguard their wealth and potentially generate additional wealth. He proposes a solution that is centered on assets that are rare and resistant to inflation, such as gold, silver, Bitcoin, and Ethereum. Kiyosaki forecasts that silver prices might skyrocket from $50 to $70 in the near future and could even reach $200 by the year 2026. He frames the pandemonium as a unique opportunity for investors who are well prepared to realize life-changing gains. In a straightforward manner, he conveys the message that the crash has already started, but those who position themselves intelligently now have the potential to emerge from the other side significantly stronger.